Hi, I'm Working Dad Trader, and today I thought we'd do something a little different. Quite recently, only I think last week on Bloomberg News channel, Ray Dalio, the really big investor, he's the sort of big head and CEO of Bridgewater Associate, a really big investment firm, did a chat on Bloomberg News, and I thought this would be a really interesting topic to sort of go through and discuss and share. It was him talking about China, and obviously China's been massive this year, and obviously there's been a lot going on in China and how it's affected people's stocks, mine included. Obviously my portfolio, I've got quite a lot of Chinese stocks, and obviously that's had a big impact on my portfolio because a lot of my stocks are down. Ray Dalio has also been a massive investor in China for many years, so I thought it would be really quite interesting sort of looking at his opinion and his views and sharing it with you guys. So let's have a look.
This morning. Let's go to China now. It's so much in the news. I wanted to wait, but I think we've just got to get to China right now. This is a new Beijing. Is it a return to an old Beijing that you and I knew when you were buying Northeast Air? Or do you envision a Beijing that's moving to a new territory?
Well, you have daughter and son-in-law in Shanghai, and so we get
We're living it in real time.
We're living it in real time. And the more you have contact, I think the more you understand it. I don't think it's well understood. For a long time, the question is, how can communism and capitalism coexist? That's the riddle you have to answer, and he had to answer it a while ago. And what do these people want at the top? And what the answer to that riddle was told also by Deng Xiaoping when he was asked. He said, it's glorious to be rich. And then they asked about capitalism, and he says, it doesn't matter if it's a black cat or a white cat, just as long as it catches mice. And so the idea is producing wealth. And so capitalism, yes, but the redistribution. Okay, so we have four things that are really going on in China, if you understand their intent. Common prosperity is the word now, okay? And it has been the objective to raise money and then to broaden the base of that, okay? Right. That's common prosperity. So if you look at their tax rates, they're lower than the United States. If you look at the measures of almost capitalism, they have as much capitalism or more capitalism, much more so than Europe, for example. And now they're in a prospect to broaden that. So I think there's a tendency, and an understandable tendency, to think because they are Maoist and communist that they're going to go back to that kind of a thing. And they're not. Deng Xiaoping, Xi Jinping just, for example, introduced the newest stock market in Beijing. He made a point of being the one who introduced the market in Beijing to the small and medium-sized enterprises. They know that it catches mice. And so the issue is that the capitalist is not in control. The issue is that there's a system for the whole system, and then what they want to do is make sure that it's not a capitalist-driven system. So, and then there's data control, and then you have to understand there's micromanagement.
Okay, so he addresses the situation, which is China going back to its sort of really hard old sort of communist ways. And I think the answer is quite clearly that he doesn't think so. It sort of became a sort of capitalist country quite a bit, but not quite fully like the West. And he sort of doesn't think that it's going to go back in that direction. China in itself likes producing wealth for its country and growing it. I mean, it's one of the fastest growing countries in the last 20 years from where it started to where it is now. And the number one goal for China and the Chinese government is common prosperity, which is what he's saying is that they want everyone to have wealth and not have everyone in the country to be well off and not poor. So they're trying to make it sort of equal across the board. He also obviously mentioned about the tax rate in China is actually a lower tax rate, that people pay less tax than they do in the US, so it's a lower tax rate, so they're not putting burden again on the people of China. Other things he talked about were obviously the new stock market that China's going to start introducing. This is to encourage small companies and medium-sized companies to go onto their own little Chinese stock exchange, and so people within China can invest in these companies and help grow these companies, and also as these companies grow, then just the normal people of China will benefit from these companies growing, and benefit as in when their value and when they invest, that their investment goes up. And basically that, like he's saying, the capitalist people are not in control in China. It is definitely the Chinese people, the Chinese government that are in control of the situation. Whereas in like the West, say if Amazon wants to do something, or Facebook, they can put a lot of pressure because of their money and how much money they got on individuals or governments to do certain things, or maybe change certain rules to suit them. That's not something that happens in China. China decides what happens, and that is the difference between sort of, that's what he's saying, from sort of the East and the West, that these sort of big companies, like in the past that we've just had Alibaba and Tencent and people like that, they've been reminded that it's the Chinese government in control and they have to follow their rules to prosper.
System works.
Okay, I want to go to my number one question to Ray Dalio. I'm fascinated by this. You and I have sat at the M-Bar, at the Mandarin in Hong Kong, and looked at that spectacular experiment. I had the honor of Lord Patton with us the day of the Hong Kong collapse, the change essentially in polity there. How should our Western banks, the people you know, James Dimon, Staley of Barclays, Moynihan of a reinvigorated Bank of America, how should the Western banks adapt and adjust in Hong Kong to new China realities?
Well, I think very simply, you have to decide whether the rules and the place is a place that you're comfortable with. They will set the rules, and you go in there and you decide if you're going to be part of that as a good citizen or you're not. And then, but you don't jump in and out. In other words, China's a strategic play. You're not going to jump in and out. And the amount that you're in should be that which you're comfortable with. It's the same as an investor. It's not smart to sell on the break or buy. It's a strategic play. Most investors are very overweight in the United States or other places. Diversification. There's a competition, a big competition, a war of sorts going on in technology and so on. That diversification, put the amount and the exposure that you want to have there, because you have to have places on some money on two chips, because there are risks in the United States too.
Okay, so on that clip, he's talking about that China is not a short-term play. If you're going to invest in China, it's a long-term investment. It's not really something that you can just dip in and out of. He's saying that you have to invest with an amount that you're comfortable with and invest for a long term, because there's some great opportunities long term in China, and I totally agree. Obviously it's down at the moment, but this is going to be temporary, and once this is all sorted out, it's going to be some great opportunities. The other thing he was saying, talking about, is diversification, which is always really important and really key. He's saying, talking about, is, you know, there's also issues in the US, and you shouldn't have all of your money in the US market. Diversification is a great idea. And he talked about having two chips, because there's a big battle between obviously China and the US in the trade wars, etc. And especially in technology and different things, they want to be the Chinese companies against the US companies. And he's saying it's always a good idea to put your money on two chips instead of one. So he's talking about putting some money in China and some money in the US. That makes really great sense. But I would also go even further and say, to me personally, that I would sooner put my money on three chips, because I also see India as a big player in the future. In the next 10 years, I can see the Indian stock market also being a really big player out there. And that is already the plan that I put into place. I've got already funds and ETFs in the Indian market. I've got my investments in China, and I've also got my investments in the US, and I see this, as Ray was saying, as a really good play for the future.
Know what you don't know, that what you don't know and how to deal with it.
What does he not know about the United States of America, the resiliency of this nation from the Pacific Rim, from Australia and MacArthur all the way up to Tokyo?
Well, there's a totally different approach. Whether you like it or not, we are a bottom-up individualist. It's built around individualists,
right.
And it's built, I think.
You're the example.
And the individuals, and bring immigrants to the United States, and that the power of the individual. In China, it is the top-down, and it is an extended family. One of the leaders said to me, for example, it's like a strict parent. And so when we deal with things like video games, do you want your kids to watch video games? In the United States, we would say that's a parental decision. Generally speaking, it wouldn't be the state to make that. They would say it's terrible what's going on, and the state is going to mandate it. So that there are those two approaches, and I would say that the understanding the relative merits and understanding really how we can get along. Because there's a risk of war, there's a risk of conflict here. And so understand how we can get along. I wish that, yes, Chinese understood Americans better and Americans understood Chinese better.
I want to bring it back.
Okay, so on that clip, he's just basically talking about that you really have to accept there are completely different rules, and you have to spend time to understand the way China do things to the way the Western world do things. Is a lot of differences. And we just have to sort of accept and understand and do some research into the way they think and the rules that are different. Obviously, the Chinese government have different ideas, and the Chinese people have different ideas of how they want their country to grow. Their idea in China is the top down, so people in the government make the decisions, and then that filters down through. In the US and the West, there's a lot more individualism, and he's talking about how people can make themselves, in the West, they can make a really successful business and become really, really rich and a millionaire, etc. Where it's harder to do that in China, because they like to filter the wealth down to other people, so everyone gets a share of the Chinese wealth, so the whole of the country and the whole of the economy grows together. Whereas a lot more individualism, and it's sort of bottom up. This is what he's talking about in the US, in the UK, etc. And it's just different rules. And to invest in China, and for companies to invest in China, you just have to accept the rules. And again, once you get your head around those and see the ideas of how China's going about it, then there's still money to be made. And it's like he's saying, we just have to understand each other. The Chinese have to understand the US way of doing things, and the US and the West have to understand the way China do things, and then everyone can be successful. Okay, I hope you got something from that. It's always really interesting to listen to what the real big experts of these massive investment funds are doing in their opinions. It's always valuable to take on board what they're saying, especially with Ray, when he's such a big investor in China himself. And I have to agree with a lot of what he's saying, so it's always interesting also to learn from him. So I hope you got something from that. Like I say, I'm invested in 3 different areas: the US, India and China. So it's always interesting to see what his opinion is on China. So I hope you really enjoyed it. If you would like to thank me for putting this free material together, then all I ask for you is to smash that like button. That really does help grow my channel. And if you want to subscribe, then please subscribe and you get more content as I produce it. And I hope to see you soon. Okay, take care.